Uh, yeah, thanks. To start with, let me introduce about myself. I'm Pratik. I am heading employee benefit in insurancemanager.com. Most of you might be knowing Insurance Manager, but for the people who are not aware, I would like to introduce Insurance Manager, which is one of the leading insurance advisory company in commercial line insurance space. And today we are here to speak about our newest offering, that is Plassure. It gives me immense pleasure to host this webinar for our wonderful audience. Plassure is 360-degree risk management and insurance practice exclusively catering to the plastic allied manufacturing companies. This session will be run by our director, Mr. Pramod Bhuvan, who will take us through the offerings in details. If you have any doubt or queries, you can reach out to us in the question answer session, and we would be happy to take it at the end of the session. And also would like to add one more thing, that this copy of this video will be also uploaded on the YouTube, which you can view at the later date. With this, I would like to hand over the session to Mr. Pramod Bhuvan to take this ahead. Thank you, and over to you, sir.
Thank you so much, Pratik. A warm welcome to all our guests who have come on a busy Tuesday, and we would like to make this session as knowledgeable as possible because we very strongly believe that knowledge sharing is, especially in the insurance sector, what we can do is for all our stakeholders is by imparting knowledge so that they can take informed decision making related to all the risk management policies and practices which they normally day to day take insurance decisions for. Right, coming to the topic for the day, which is Plassure. Plassure is our newest offering. Basically, it's a promise from insurance manager to all our manufacturing companies, especially in the companies which use plastics as raw material. It's a 360-degree risk management and insurance practice. And as I told, it's exclusively catering to the plastics and allied manufacturing company. The domain is also registered as plassure.com. Before I take you through the session and blow out the USPs in the proposal, there was a lot of talk as to why Plassure and what was the need to develop and package a specialist product for the industry, because most of the times in India we are aware about policies which are commoditized. Matlab, normally you don't buy specific covers for industry, you buy general covers, like for example fire, burglary. But why Plassure is so special? So with our experience and understanding for the last 15 years, we identified few challenges in the industry. So I would like to highlight those challenges here, and that prompted us to develop this product. So one of the aspect in the industry was the higher pricing. When I say higher pricing of insurance products, especially the fire insurance policies for which you pay the premium annually. So here, even after the IIB regulation came in 2020, the regulation or the IIB pricing was not giving an impetus on better risk management practices. All of the clients were priced similarly. There was no differentiator. If our risk is managed better, the premium was the same. For companies which were not into great risk management practices, even for them the premium was same. So no discounts on better managed risk. The second aspect was, of course, there was no discount. So we have to face this every year when we go to business owners for renewals, and when we talk to the CFOs, they always expect certain discount in pricing for no claims every year, because that's a general practice across the industry to give no claim bonus discount. But with the IIB regulation coming in, that option was also not available. So of course, the first aspect which I blowed out was the higher pricing in the industry. The second problem was the narrow coverages which is available. So unlike in India, the standard fire and special perils policy, which covers you only for 12 perils, is available in India. Whereas again, if you see internationally, there are products which are like property all risk, which comes with no exclusions. Whereas in India, the fire policy covers you only for 12 named perils. Agar if there's a 13th peril is a loss producing event. If there's a 13th peril, the claim will not be payable. Whereas in the international market, in Europe, in the much advanced markets, there's a property all risk form which is sold. So this is the second aspect. In fact, apart from that, there's no packaging of product also available. Like for example, your property risk, your employee risk, your crime, fraud risk, or your liability risk, can it be bundled and packaged into one single policies or one single solutions and offered to companies? answer was no. So narrow coverage was the second aspect. The third option was availability of high rated insurance companies. So normally, in fact, a lot of our clients will agree to this, that at the time of renewal, plastic being hazardous in nature, not many insurance companies are very keen to participate in the risk. In fact, most of the time, this risk are placed with public sector options, public sector companies with very limited options available for clients at disposal. So this was the third challenge. The fourth challenge was there was nothing much done on the risk improvement from the insurance company, the broker perspective. These are mostly SME, MSME companies, which doesn't have mostly full-fledged fire and safety department heads. So here, how the insurance company or the service providers like us can step in and actually improve the risk, like by doing some property loss prevention programs. The fifth aspect was, even after high pricing, low coverages, the settlements of claims in property claims, especially in plastic companies which have faced claims, are very low. And also there are delayed settlements. Insurance companies, unlike other occupancies, have been taking longer time to settle claims. And the disposal ratio is for every 100 rupees of claim which you lodge with the insurance company, what is the quantum of amount which the insurance company will settle is always a challenge. Not so, our experience says not more than 55% of the claims were settled in MSME companies. And there were a lot of, so these are the 5 areas which we need to address, and that is how we devised this solution called as Plassure. I'll take you through the unique offerings which intends to solve all these 5 problems. Thank you. Sorry. Right. So this is our deck page. As I told you earlier, it's branded as plassure.com, and it's a 360-degree risk management practice exclusively catering to the plastic and allied manufacturing company. What is the unique offering? So there are 9 modules here. I'll be taking through each of these 9 modules in my session in the next 20 odd minutes, and I'll make you aware as to how these offerings can help you find solutions for the 5 challenges which I blowed out. The first, of course, was the Business Guard 360. The problem here was that normally there is the policies which are placed in Indian market, especially for business and factory risks, are the standard fire and special perils, which takes care of the factory fixed assets to some extent. But what about the other assets, including the building, the plant and machinery, the stocks, the furniture, fixtures, and fittings? There are business interruption risks like loss of profits. There are computers and laptops which are there in the offices. There are employee who are on payroll, workmen, either contractual or who are on the shop floor. There is a fraud risk. So this is something which has come up very strong of late, and it's a matter of grave concern, especially for corporates who are into manufacturing, who are into exports. So earlier fraud was resembled as something related to cash, related to stocks. But now a new type of fraud, especially financial fraud, wherein it can be as simple as someone beefed into the email security system, breached the systems, and sends an email to your customers saying the bank account has been changed and you have to now transfer the funds in the new account. And you are here just following up with the customer for the payment. So there's a cover for fraud available. The liability again is a very comprehensive general liability, which covers not only the premises liability, which is the public liability, the product liability, but most importantly, there are 2 aspects of cover which none of the other insurers are offering in the market, which is one is product recall, and the third is the product guarantee and financial loss cover. So each of these modules have got something to offer which is very unique. And what we have tried doing here is bundled out into one single solution, which is made available. Of course, there's an option to pick and choose these covers, and we have branded this as Business Guard 360. Okay, over to the okay, there's a poll which has come up. I would request all of the participants to tell us what you think of these questions. The first question which has popped up is, which of the following risks are covered under the Business Guard? I hope you will all participate, and I think the answers will also be showed on your deck once you have identified and participated in the poll. Right, thank you. Okay, over to the next question, next module, which is the risk inspection module. The risk inspection modules covers has threefold objectives. So, so risk inspection is nothing new with which we are doing. Of course, it is followed in the industry, but I want to tell you why this is very important. Most of the time, what happens is the insurer tries to buck pass the responsibility or shy away from responsibility by saying we were not aware what is the rating, what is the occupancy, what is the layout, what are the storage practices, and these things may be insurer submission of claim rejection. Okay, we were not made aware. So here, by doing a risk inspection, which is nothing but a risk engineer from our side goes and visits the factory, documents all the housekeeping practices, takes photographs of relevant areas, and documents this and makes a proper inspection report on what kind of manufacturing, raw material, the manufacturing process, and so on and so forth. And a very comprehensive document is prepared, which is called as the risk inspection report. So this report has threefold objective. One is the insurance company is able to underwrite the risk and cannot buck pass their responsibility from the perspective of understanding of risk. From a broker perspective, very important, because we are able to identify what are the gaps in the policies or what are the covers which are missing from physical asset perspective. And from client perspective, again, very, very important, because you have represented your risk or shown your risk to the insurance company. So in a way, the insurance company cannot tomorrow deny on anything on any of the risk which they may say that they were not aware of. So in fact, this is again a very important aspect of our practice which we follow. I go to the next module. Okay, there's a second poll question again. So some of these poll questions you may find that relevant to what we are speaking, and I request you all to participate in it and give your feedbacks, or select the option which you feel is the most right. Okay, the third module is the gap analysis, and now why and how this is again very, very important. See, most of the policies which are placed, what we have seen, especially in the MSME companies, are placed with people who are relatives or friends of business owners. Okay, that is good, because trust is one of the first and foremost thing which is required for placement of risk, and you should be comfortable with people. But what we have seen also, insurance is a contract of document. At the time of claim, it is only how the contract behaves decides as to what kind of claims will be payable and what quantum of claims will be payable. So here our underwriting teams works very closely to identify two areas of gap. One is, what are the clauses which are missing in the existing policies? What are the conditions which are detrimental to your policy at the time of claim? I would like to quote an example here in one of the cases, which is related to plastic manufacturing only. In fact, I'll give you all examples related to our experience here only. That So PE and PP, polyethylene and polypropylene, were used as raw materials in the manufacturing process. And on policy audit, we identified one of the warranties in the policies that saying that PE and PP as raw materials are not covered under the policy. So that was one of the warranties. Just imagine the fact, tomorrow if there's a claim and if such a condition is mentioned in the policy, the insurance company can take the client for toss, may reject the claim in totality, or at least move into a position of comfort where they can dictate the terms with the insured, and direct the settlements of the claim, and make it a non-standard claim, what I'm trying. So they will not reject the claim maybe, but of course, if it is dragged into a court of law, they can, because the contract says that polyethylene and polypropylene is not covered under the policy. So I'll not dwell into more there, but what we do here is, one, to identify conditions which are detrimental. The second aspect of the underwriting team is that they work very closely and try and identify what are the advanced versions of policies available. For example, if you have a standard fire cover, whether a loss of profit policy can be incorporated in the same. Similarly, can you buy a standalone machinery breakdown, or maybe combine burglary, machinery breakdown, loss of profit, and combine into an IAR policy. So these are the options which we explore and we try to give you from the gap analysis perspective. Okay, this is an extended. Okay, there's a third question which has popped up. Which are the covers under industrial all risk policy? Okay, right. I know the answer, but I hope all of you will try and answer this. I think the poll also gives you an option to identify which is the most right option available. Okay, now going ahead on the add-on covers aspect, there's a add-on cover. So there are 50 plus industry relevant, 50 plus add-on covers which are filed by us and which we normally give in our code comparative report. But there are 15 plus add-on covers very specific to the industry. Like for example, uh, how to value your molds and dies. Similarly, we have seen a lot of manufacturing companies buying second-hand machineries. So second-hand machineries have to be valued on depreciated market value settlements because the reinstatement value clause will not work here. Similarly, waiver of underinsurance clause or maybe an electrical injury clause. So these are few add-on covers which are very specific. In fact, the list is very exhaustive, which we give you when we do our submissions of code comparative. These add-on covers come at no additional cost, but this will ensure that your claims are maximized for settlement. And we strongly recommend these add-on covers to be part of the policy documents. I go to the next one. Okay. So this is something which is our claims expertise, our handling of claims, especially large claims. Recently, we settled a claim of 20 crores in plastic manufacturing. Last year, we had settled a claim of around 12 crores. And most importantly, after settlements of claims, we have been able to retain these clients, which means we have not only settled their claims, but claims settled to their satisfaction. Of course, that has helped us to retain. But with our experience, we have prepared a small presentation called as Fire Insurance Best Practices, which is basically a 50-point checklist. I mean, why this? What happens is normally businesses are done to do profits, especially the MSME companies, which are very closely held companies, which are promoter driven companies. At times we have seen a lot of accounting and compliances not being in place, and the entire focus is on to make profits, sometimes to reduce taxes also. But I'll not dwell more there. But what our experience is, when your policy copy your assets, factory assets or your office assets, and your books of accounts, if these all three are in sync, then only you qualify for claim. So here we ask you 50 probing questions related to your bookkeeping and accountancy, which helps us to identify the gray areas and ensure that we do proper drafting in your policy to ensure that these uncovered areas or these gray areas are also made part of the cover. So there are clauses and conditions which we incorporate to ensure. It can be as simple as some assets which are not capitalized. We have seen claims where the assets were some of the assets, the ancillary assets were not capitalized, and that's why, because they were not part of the gross block, they were not part of the claim. So such kind of experiences happen only once you have seen a claim. But with our experience in handling of these claims, we ask certain relevant probing questions and ensure that you either correct your books of accounts or at least tell us, so that we make the adequate arrangement in terms of clauses and conditions in the policy, so that in case of an untoward incident, the insurance company would settle the claim or would settle the claim, right? Okay. So here, one of the challenges which has crippled the MSME, especially after losses, is the low claim disposal ratio. The claim disposal ratio is something what, so normally people talk about claim milega ki nahi milega. That question is, I personally feel, with my experience of 20 years in the industry, is a very wrong question, because normally insurance company say claim milta hai, or so the claim settlement is normally 96 to 98% with insurance companies. But what is very important is what is the quantum, or what is the once you lodge a claim of 100 rupees, thinking that this is what you should get from the insurer, what is the amount the insurance company is settling that claim amount for? So our experience with our survey with top insurers is that the settlement is not more than 55%. So every 100 rupees of claim bill you raise to the insurance company will give you out only 55. 45 will be deducted for various reasons, including insurance company, as simple as surveyors not accepting your submissions. But the main culprit which we have identified here is the underinsurance of assets. In fact, in one of the courts where we participate, we when we spoke about valuation, we identified that client was taking policies on WDV value, written down values, which is, I think a crime, because these kind of covers policies, even if you take, will not be good enough to make any kind of reinstatement of assets. The amount which you will get from the insurers will not help you to do reinstatement of assets. In fact, gross block values also don't help, because the policy is issued on reinstatement value. It's a value which is identified. So there are IDA certified valuers who can help you arrive at the right reinstatement value. We help businesses engage with such service providers, and we give this service in some cases complimentary, where we can help you get reinstatement value, which can become the basis of annexure of your policy sum insured. So here, right from, so the reinstatement value is not only restricted only for the fixed asset, which includes your building and plant and machinery. We also advise on what values. For example, most of the times we have seen that stocks are insured without GST. But not many are aware that once there's a claim or a loss, the authorities will treat this as consumption, and you'll have to pay GST on that value. So GST has to be taken. Similarly, the loss of profit value. How do we arrive at the loss of profit reinstatement value? We help corporates, advise them on how to value the right valuations, get so that the insurance is done on optimum value. When I say optimum value, we have also come across few cases where the values were overvalued, and the clients were paying higher premium, but that was only 1 or 2% of the cases. 98% we have seen the valuations are undervalued, and then they blame the settlement for so because, and the settlements are at lesser value. So here we recommend very strongly that your asset should be insured on reinstatement value. And because it's a specialist job, let's take the help of those specialists to identify those valuations, what is right, and make them annexure or part of the policy documents. Okay, so now I go to the last module, which is one of the biggest USPs which we have, which is called as the property loss prevention program. Now, I spoke about the higher pricing in the industry, especially in the, okay, there's a new question which has popped up. Is a question number 5, and it's related to the valuation of fixed assets. In fact, I answered this question. Over to you guys. Right, thanks. Okay, so coming to the loss prevention program, here what we are doing is we are helping corporates. So a lot of these MSME companies don't have a full-fledged fire and safety department. In fact, most of the risk improvements are handled by their electrical and maintenance team. So here we virtually help them by conducting certain audits, like for example, electrical fire safety audits and thermography. So these are one of the 2 flagship audits which we do in corporates. Thermography is a process of thermal imaging. Most of the industrial fires are because of short circuiting, and these can be identified at very early stage through infrared cameras. So our engineers go, they take relevant photographs of those panels, socket areas, control panels, TG sets where there are electrical installations, and in fact of the entire plant, including critical machines, so that the electrical team can work on those areas where there have been identified as hot spots, which we call as, which doesn't require but as simple as just change of wires in those areas, so that the overheating stops. Similarly, electrical fire safety audit is again a much recommended and much appreciated from corporates, where we do electrical audits. We identify any deviations from the electrical standards, what are the housekeeping and facility management how it is should be done. Similarly, if the installations are as per the industrial standard, as I told you, and the other deviations are blown out in the report. And we what we expect once we have done this audit is recommendation implementation. We need the support of CFOs and business owners from the factory department to ensure that these reports are implemented. So in this process, what we do is basically, when you do these electrical audits and thermography, insurers become very comfortable with the risk. They are keen to underwrite such risks, which are better managed risks. And in this process, we actually solve two problems. One is we are able to get quality. So we improve the risk. At the same time, we reduce the price also, because if a risk is good, the insurers will be ready to participate and will be able to give you better discounts because they are liking the risk. Agar if you don't do these activities, leave discount, they will not come to participate. They will not be at disposal only. They will not come on the platform only to participate in the risk. So here, as I told you, this activities has two. One is, of course, improving this threefold objective. Sorry, one is improving the risk, reducing the price, and getting quality insurance companies which have highest ratings on like AAA, AAA rated insurance companies. Similarly, companies which have got great financial solvency ratios, because this is very critical. If you get a quality insurance company, then half the battle is won. But we have seen here in this industry, a lot of these businesses are placed with public sector companies, which doesn't have the solvency, which doesn't have the ability, the willingness to play. And most of the time, these claims settlements are a distress settlements. They are not fair settlements. That's what our experience is. So here, what we bring to table through these programs is quality insurance companies at lesser price. Okay. So I also okay. I also take you to the next module. This is the extended version of our claims. Claims is the moment of truth. We feel the entire product, entire servicing which we do. Ultimately, the objective is that we should be able to settle your claims faster and fair. Here, our claims team, headed by Mr. Shanbag and Mr. Mahesh, they help you not only from the point we appoint a
It seems there is some electric glitch. We'll just wait for a second. So Prasad, in between, I would request you, if you can just, we have got a couple of questions. If you can just answer those.
Yes, thank you so much.
So in between, in that time, we just answer those questions.
Right. So let me just scroll you from my question. Just a minute.
And also, I would request you, all the participants, if you have any questions or any doubts or queries, you can raise those questions in the question and answer tab. We will be more than happy to answer those.
So we have got question from Yogesh. I just read out: after doing the risk inspection, recommendation remarks given by the insurance company are mandatory to implement. What if not implement? Will my claim get rejected? So yes, these are the real pain points. You as a policyholder, this may be a confusion. So the answer is no. Okay, you don't have to compulsorily do the recommendation. However, we have been advising you to please do a serious check on the recommendation remarks. Why? Because all those remarks are given to improve the overall risk highlighted by the insurer. So by implementing those recommendations, insurance companies are rest assured, as you as a policyholder itself is inclined to improve your overall hygiene of factory premises, so which will reduce the possibility of fire-like incidences. So I hope I had answered this question. I'll move on to the next question. What is the sum insured criteria for obtaining industrial all risk policy? Okay, so the answer is very simple. For IR policy, the sum insured criteria will be sum insured should be above 50 crore. All the assets, including your plant and machinery and your stock and your building and all those spares and packing materials, overall put together, sum insured above 50 crore are qualified for industrial all risk policy. However, you as a policyholder must take an informed decision, as this there are deductible in the IR policy are much higher than the traditional SFSP policy or the Bharat Laghu Sukshma policy. Thank you. I'll take the last one. Would like to understand how often the valuation should take place? Okay. So how often? Okay. So as this valuation are related to your replacement cost or the reinstatement value, so you have to consider the replacement cost for machineries are so fluctuating in nature by various participating factors that are inflation in Indian market. Your OEM is may not be in business, so you have to opt for involuntary betterment is the final option. Again, on the building reconstruction side, all these reconstruction costs are again fluctuating nature. There may be increase in cost of cement and metal use. Hence, it is advisable to do the valuation of building and plant and machinery after every 3 years. So these are the advice from our side. I think I'd answered all the questions. If any participant have any more questions, I would be happy to take this. So I think we must hand over again to Pramod sir for the leftover presentation. Over to you, Pramod sir.
Sorry, Prasad, I've joined from the mobile.
Okay, sir. I'll share the presentation and I'll take the rest of the presentation. Not an issue. So we come to the end of the session, wherein we would like to highlight the recent changes which are expected by 1st April by the regulator. So there may be a possibility that insurers are being directed by the regulator to offer the free price regime. So what are you expect in this free price regime? That you as a plastic manufacturing company can expect some kind of discount. Okay, now why I'm saying you can expect, because these are not the final submission by the insurer. We'll get the concrete answers probably by 15th of March. So you can expect the good discount. However, it is recommended to improve on the risk perspective. When I say improve on the risk perspective, you should do your valuation. You should implement all the risk recommendation given by the insurance company. And if you again can step ahead and implement all those VAS offered by us, so it will be a win-win situation for both insurer and you as a policyholder. So insurer are very happy to give you the more discounts. So you can expect a free market regime after the 1st April. However, we'll soon be conducting the webinar on this. So stay tuned. I think we have come to the end. Over to you, Pratik sir.
Thank you, Prasad, for this understanding, and also thank you, Pramod sir, for giving us the insight about this newest product, our Plassure. Would like to thank all the participants for giving the valuable time for the session on this busy day. I hope this session was educative and also a lot of given you a lot of understanding how the product has been designed. We received a couple of questions which were answered, but I'm very sure there may be a few questions which may come up later on or whenever they feel like. They can surely connect to us over the call, or maybe if required, would like to come and meet in person also to, if there are any doubts or questions which need a technical answers. So on behalf of the insurance manager, I would like to thank you each and everyone for your valuable time. And I'm really looking forward to connect you on this Plassure product for any of your renewals. Yes, thank you very much everyone for your time. Thank you.